Welcome back, everyone. There's been quite a few changes in the portfolio. We've lost a few companies and gained a few new ones. I trimmed a lot of the returns, which means we can see here in the overview there's over £350 extra invested, although most of that was in fact general returns from the likes of Burberry, Greg and Ferrexpo. All their stocks, I got them at quite a discount about a month ago. In September time, and they skyrocketed, and I took most of them off because we picked up some new companies in the portfolio, and I'm going to talk you through all the reasoning behind that. I added about £100 in cash in the past couple of weeks to that number as well. Total gain of £31.31 since we first started this, £10 of that coming from DS Smith. So let's go through and see all the differences from last, was it about 2 weeks ago? I think it was 2 weeks ago I did the last update. Airtel Africa still holding strong. We're past the 500 share mark. It got a nice round number. Its target's about 15%. Still have Royal Mail, and we still have Legal & General, DS Smith and National Grid. These four are key components going forward. Now, Royal Mail, I know there's been a few issues with it. Their dividend likely to be cut, but I have a lot of hope for them going into the future. So they're staying strong, actually up 11%. I know Airtel Africa's down, but listen, that's been a running theme with this dividend portfolio. It is definitely the one I'm hedging my bets against because I wanted a telecoms company. None of the ones in the UK did it for me, but look at it. When I found Airtel Africa, I was like, hold on, I like that stock. So that was picked up. Obviously a lot more reasoning into that, but a new one, British American Tobacco. Big tobacco, because tobacco are one of the best dividend pairs alongside mining and banks. Now, I know what I said in a lot of other videos. My investing strategy has changed as this portfolio has developed. I'm sure a lot of you know there are quite a few companies have joined and left each and every video. But what you should see emerging is the pattern of who stays put. These five haven't moved. Well, Legal & General was a relatively new one, and I think DS Smith was added in like the second video, and all five have remained since. Now, Taylor Wimpey has definitely solidified itself as something I will be investing in. Just the housing market in general is something I'm going to hedge against into the foreseeable future. HSBC. Now, I know what I said about Barclays and banks, and I wasn't too fond of them for a large proportion of time there, but what I've come to the conclusion of is they are a consistent dividend pair. I have to hand them, and HSBC is the largest bank in Europe. It is definitely a fantastic company. Looking into it, I have a video coming out very soon on them. I actually did one, I think it was like the third or fourth video of the channel. We'll be redoing it with all the new resources. Rio Tinto. Now, if any of you have seen the new thumbnail design and the new Rio Tinto video that was to replace the old one, you might have heard me say that I was a little iffy on mining, and I am. But I was drawn to a comment that I wouldn't say it completely changed my perspective on it, but they are, look at their bottom line of dividend payments, and their percentages are rarely below 5%. And I looked, and over all the duration of time, there was a lot of opportunity to pick up Rio Tinto. There has been at least 4 or 5 occasions in the last 2 to 3 years where the prices dropped to where I could have entered, and I can kind of see the price point you'd want to get into. Now, of course, I've got in a wee bit of a high. I'll actually show you Rio here as I went into them. They actually had a bit of a jump. You could have got them there at £44. Now, I ended up picking them up here at £53. But knowing what I know now, if I do see them drop anywhere below £50, it'll definitely be a concern to buy in. But going into the foreseeable future, I am going to keep Rio Tinto and keep going. Now, an exciting one that wasn't part of the portfolio and now is Games Workshop. Now, a lot of you may have seen the video that I did on them. I love this company, not just because I actually partake in the hobby. Years ago I was really big into it, and I've only now started getting back. It has I don't want to use the word cult, but that's as close as it's got a super loyal fan base that love it, and whilst we're going through a recession and money is tight, it is a hobby that most people if you're really into it, you will continue to, to buy paints, to buy models, to get in the time. And like any hobby, a lot of people that I know that would do Games Workshop and actually partake, they would cut the Netflix long before they would cut getting, a few extra paints or another model or two over time. So, and to be honest, the structure of the business and the way they sell out their IP for game developers and whatnot, they don't even have to do a lot of the legwork to just bring in huge amounts of revenue to a completely debt-free company. Going forward, it's very hard for them to, go bankrupt considering they have no debt and all their assets. It is very impressive. Their IP, everything's great. They will be... I'm glad that they're on board. Now, don't get me wrong. They're a wee bit of a high price, but see if I see them coming at a discount, I will swoop in to bring more into the portfolio. ABF, Associated British Foods, Primark's going online. Yes, I'm sure a lot of you have seen that recently. And after banning a load of stuff out of Primark, I'm pretty happy with it too. So, can't wait for that. Pets at Home, again, it's joined the portfolio. Love them, love their outlook. If you have a dog or a pet, of course you're going to have to take it to the vets. And what better place than Pets at Home? They have all the retail side of it, toys, food, medicine. Then they have, the vet services, the flea, the grooming, the so much. And if everything switches online, like a lot of retail businesses, the likes of Halfords and Pets at Home that go into the more service side where you have to go to them, that is definitely solid going forward. Smith & Nephew, all medical stock that I have in there, medical equipment. I'm very confident they have been here through thick and thin. I think they've actually been... I think them and Airtel Africa are probably two of the longest serving stocks in this portfolio. And the Coates Group, of course, again, is there as the textiles. And with having the Coates Group, I have dropped 3 stocks. 4, actually. We've lost Burberry, because the luxury brand, I actually seen it in person. They did the Minecraft one. And look, I can appreciate if it's in anyone else's portfolio. It's a fantastic company, don't get me wrong. But in terms of products and something I would personally want to invest in, I can't fathom the spending of that much money on certain clothing items. I can appreciate there's a market for it and there are people, and their dividend has been growing consistently and it is good. But I decided to cut my losses on the luxury brand and traded that actually for Rio Tinto. We lost Greggs. Now, Greggs, there's been an argument over whether that stock is highly overvalued or not. I did a full video breakdown on Greggs. For me personally, they've actually closed a few stores over here in Northern Ireland. Now, I'm not saying that off the bat that panicked me. I was like, I don't vote with my emotion like that. But they were putting through a drive-through. Things were looking good. But I was looking at a few things and reading a few news articles. And I came to the conclusion that I could probably hedge my bets against some, stronger industries. In this sense, I actually traded them out for Games Workshop because I would go to bed at night 100% trusting the likes of Games Workshop. So they took their place, and then we lost Ferrexpo. Now, you could say Ferrexpo was probably traded in by Rio Tinto, which is technically true. It replaced the mining side of this portfolio. But Ferrexpo has completely stopped their dividend. So for a dividend portfolio, that's a little inconvenient. But I did get them at a discount. I was going to hold them for the long run. There was a plan behind that. But instead, I just traded in the return. And look, it's done well. And I can't be too mad about it. We also lost Doc Martens. They had the lowest dividend yield of the entire portfolio. And don't get me wrong, for a long-term dividend growth stock, they would fit perfectly. I was a prime supporter of dividend growth stocks. I still am. I like the idea of that portfolio. But my youthfulness, I'm trying to be a wee bit aggressive with the dividend yields. Or not yields, but, technically the yield. I'm just trying to be aggressive with the small portfolio that I have. Plus, I want to give it as much balance. I know a lot of you are looking at this and... as much as I can't say don't base your portfolio off mine, I know a lot of you do take on board a lot of what I, put in. And the diversification for me personally in this portfolio is I like it. It's got the right mix for me personally in my investing style. We have the risky stock that's down at the moment with Airtel Africa, where I've hedged a good bit of my bets behind, but it's only 15% of the portfolio. The rest can do a bit of heavy lifting if, down the future I made a bad call on it, but I'm in belief that it's a good one. Followed by Royal Mail. I'm solid choice with that. I'm happy. Legal & General covers a massive industry that is always really good for dividends. DS Smith, the recycling side, is also a really strong proponent why they're part of the portfolio. National Grid, to me, is a bit of a no-brainer. I know Simply Wall Street and a few other analysis, have a wee bit of concern about them, but they are integral, and that means they have a moat that's very, very hard to take down, especially here in the UK. Tobacco, massive dividend pairs, but an industry that is also expanding into different fields, from vaping to the likes of all these new lines of products. And we'll see in the future what else they come up with. Taylor Wimpey, properties covered. HSBC, massive bank and a good backbone in the portfolio. Mining and Games Workshop for me, both of I'll just start with the mining. Rio Tinto, I think they're solid in that, good dividend pairs, mining precious metals that will be needed for the EV revolution. And then, Games Workshop, ABF, those two stocks, simply put, are absolute juggernauts and, great. And then we know about the rest of them. I know I went over it twice, but second time wanted to do it for a bit of diversification. Let's jump over to Dividend Watch, one of the portfolio trackers that I use. All the links are in the description if anyone wants to check it out. At 14 holdings, I've been very consistent in keeping them at 14. Annualized dividend yields about 5.73% and total annual income about 214. Now, that's maybe overestimating it because they are claiming that Royal Mail is going to pay out about £26, which I wish, but it's been declared and I don't think it's been updated just yet, that they'll be paying in January, and I'm looking at getting about £12. So you can add £12 to January, which is looking at about, £26. That will make it the best January yet. We haven't had one yet, so it's definitely a good starter. Airtel Africa are meant to be paying about £10 in December. I think it's about £9 though, because I bought 50 shares after the ex-dividend date, so I'll need to bear that in mind. And then obviously we got a good wee November going. Let's jump over to Simply Wall Street and have another wee gander at our portfolio here. Yeah, it's all the companies are... Do you know the most important thing of any company I invest in? Financial health. It's a very, very key component for me. I love companies that are financially healthy, and the vast majority of them are. It's actually I think it's the highest. It and dividends are the two highest. I like value. I like good value companies as well. Future's a bit low, but because it's based on analysts predicting the future, I don't really look at it too much. And past performance, not too bad at all. And then obviously you can get all my news here. I do, if you want to know how often I would check in the news for companies, I normally have all their stock price. I actually should show you at some stage. Can I bring it up here? Yeah. I've got all the stocks on my my iPhone. I flick through them every so often just to see what's going on. If there is a decent drop or something's happened, then I would jump into the news and try and see what's going on to see if I can pick up a wee deal here and there. I will be doing a full video on my actual investing strategy, as a whole, where I just talk about that. So, diversification, let's see, across industries. Obviously, we did lose Burberry here and Dr. Martens, but we picked up leisure products and household durables. Well, home building. Why are they in consumer durables? Okay, right. And as you can see, we are across a wide range of industries. Now, if you were to tell me what ones would you cut off, I would actually, hold on, I'll do a completely different video for that one. Like if I had to cut it down to, 6 companies, who would I take? That would be a real question of who I'm really, who do I have full faith in? Yeah. Might look into that. But yes, a few thumbnail changes in the channel. I have plenty of other content coming. We'll be comparing companies and getting the Discord server sorted. So get a wee bit of a community going, and we're almost at 1,000 subs. So thank you so much for all the support and getting to this stage. Couldn't have got here without you. It's actually a bit crazy. I'm building a new computer at the moment in order to maybe explore a bit of video editing and obviously make as good a content as I can, and plus it being just generally faster and easier to work with, help the workflow as well. Might look at getting some better lighting as well in here, just add to it all. So I'll see you all in the next one. Bye bye.